Get ready for an explosive countdown. In just 13 days, China will unleash a torrent of money into crypto as Hong Kong's groundbreaking crypto laws are set to take effect. They could bring so much money into the market that everybody's gonna be able to afford amazing shirts like this. Brace yourself for an epic influx of mainland money into the cryptocurrency market, potentially, of course, injecting billions upon billions of dollars into all of our favorite cryptocurrencies like Bitcoin and Ethereum. But amidst this exhilarating backdrop of bullish prospects out of China, we have a lurking threat from the US Federal Reserve, casting a shadow of uncertainty over the possibility of any kind of bull market, and instead saying that we could have an impending economic doomsday on our hands. But amidst this landscape of chaos, one company stands unyielding, indifferent to all of the chaos swirling around them. That company is Tether. They scoff at the notion of fear, for they are right now boldly snatching up massive amounts of Bitcoin. So move aside, MicroStrategy. There is a new reigning Bitcoin boss whale in town. Let's start off our conversation here by talking about China. June 1st is the day. This is the day that Hong Kong's new crypto law actually comes into effect. This allows for retail investors to be able to buy crypto in Hong Kong. Now, this is on the back of massive moves from Hong Kong, from launching Bitcoin ETFs to forcing banks to work with cryptocurrency companies. And all of this is reportedly happening with, very importantly here, the approval of Beijing, meaning that China's window on the world of finance, window to the West, if you will, is opening up to crypto in a big way. In fact, they've stated they want to become a major cryptocurrency hub, again, with Beijing's approval, which is massive. This will be the filter through which billions of dollars of Chinese money enters into the cryptocurrency markets. And while this is happening, we are seeing the Chinese central bank keeping that money printer rolling, baby. They are leading the world and expanding global liquidity right now, pumping billions upon billions into the markets. And the more money pumps into the markets, the more we can see markets rise. So do not fade that money pump. And by the way, it's not just China trying to capture crypto market share here. France's regulators have said that they have received more than 100 inquiries in registering in France by US companies who are fleeing the country. France is going to, how do you say, eat your lunch, America, huh? Look, the doors are open for business around the world right now for crypto, from France to the UK, who's about to pass massive legislation, Dubai, Singapore, Hong Kong. The level to which the USA is screwing up their approach to crypto right now is hard to quantify. It's painful. And this tweet basically sums up how the US is protecting investors, right? Anyway, at least they're not banning it like Pakistan just did. Silly move, Pakistan. Could be slightly worse, I guess, in America. Anyway, now let's talk about the big news everyone is talking about, is what will the Federal Reserve do next? And then what happens after they do something? Well, nobody knows the answer for sure. But we all do like to speculate, which is exactly what we're about to do. So right now, the market is betting on a 40% chance that we see one more rate hike coming in June. Now, this is probably because the drop in inflation last month was not very big at all. We only went from 5% down to 4.9%. Instead of, like the previous month, we went from 6% to 5%. However, keep in mind that there is a 60% chance that the Fed actually pauses rate hikes next month. So that's a positive thing, right? We're still in the odds. That, if it happened, could kick off a nice bullish summer. But if the pause doesn't come in June, then July probably is when the pause is going to happen. The market is also pricing in a good chance that rate cuts could start as soon as September. This chart here shows that from the time rate hikes are paused until the first cut happens can last anywhere from 1 to 15 months. 6 months is technically about the average here. In most cases, recessions are officially declared within a few months of the first rate cuts happening, although not always. We have a lot of mixed data here. Sometimes recessions don't come for years after the rates are cut, which could happen this time or not. Currently, the inflation is high though, higher than any other year on this chart here. Economic growth is also low, lower than any other year on this chart here. The S&P 500 earnings forecast at 18x is the second highest on the chart since the dot-com bubble, which is not something you really want to be compared to. Growth is at the lowest at 4%. Silver lining here is that in all cases, the S&P 500 put in higher returns in the 3 months following interest rate hike pauses. And in most cases, not all, but most cases, we saw that markets were actually much higher 12 months after the Fed paused rate hikes. Except in the dot-com boom again, but then again, the dot-com era rate hikes, actually the pause coincided with the market top, not a low like we're at right now. Our current market structure, very, very different from the dot-com era when rates started changing. In many ways, right now we're in uncharted waters. We see a lot of mixed data there. By the way, right now we're seeing equity markets are having near record levels of shorts. So it seems some players, a lot of players in fact, think the worst is yet to come. So is the crowd wrong? Are we gonna have a big short squeeze washing all these guys out, or are they right? Let me know what you think down below in the comment section. Now, before we talk about who has been buying up all of that Bitcoin, if you are a trader, then you need yourself an account over on Bybit. It is the best place for trading futures. They have crazy good spot altcoin markets. They do very popular copy trading service. And if you use that link down below in the description to start your account, you're gonna get $30,000 up to $30,000 in deposit and trading bonuses, as well as a limited time offer of a free $1,000 BTC USDT trading position, which you can claim exclusively using that link to start your account. Let's get in here. By the way, charts, back to it. Crazy thing is here, with all the craziness going on, all that fear and uncertainty around what the Fed is going to or not going to do, what's the S&P 500 doing? Well, the S&P 500 has been rallying hard. In fact, currently it's a key area of resistance. That key area of resistance is at the highest levels it's been since August of last year. Also worth noting that after breaking the downtrend line on the weekly, that the S&P 500 also put in a bullish retest of that breakout, setting up, from a technical perspective anyway, could actually be a pretty good move for the markets. So we'll see how that plays out, of course. It's kind of funny, isn't it? Anyway, Bitcoin has not been super closely correlated to the stock market. So while stocks are doing okay at the moment, these last few days, Bitcoin not so much. In fact, Bitcoin has been much more correlated with gold. So cool, we're correlating with store value when, you know, stocks are doing better. Anyway, orange line here on the chart, you'll see is gold and less correlated with stocks, which is the blue line on the chart here. Pretty interesting. Anyway, let's talk about Tether. Everyone's love to hate stablecoin company. They are buying Bitcoin, like lots of Bitcoin. So far, about 52,000 Bitcoin, in fact. Now, how is Tether, a company running a stablecoin, able to afford this? Well, it's pretty simple. They are holding tens of billions of dollars in things like US Treasury bills. Thus, they are making right now, because the interest rates are so high, insane gains off of the payouts that they're getting. They are taking that money and plowing their profits into gold and into Bitcoin. This is essentially the stablecoin business model. We give them cash and they get to earn interest off of the money that we give them, and we get casino chips that bear no interest. It's how the game works, man. Don't hate the player, hate the game. Also, to be clear, they are not using BTC to back USDT. I've seen some people say that. That's not what's happening here. These are simply company profits that are being held in BTC. It has nothing to do with the backing of USDT. Also, they said that they're going to continue to buy BTC using 15% of their profits moving forward. That equals, at current rates, around $75 million per month, or about $900 million a year. That's about 3,000 Bitcoin per month, or 36,000 Bitcoin a year at current prices and current interest rates. Anyway, I think it's really good to see more companies buying Bitcoin. Crypto native company, so that's cool. But the thing to watch for now is when Tether starts selling all that Bitcoin, because they will probably mark the market top in late 2024 or early 2025. So that's something to watch out for. And Tether sells their Bitcoin, watch out below, guys, because that's a lot of BTC they're going to be offloading. Okay, that's it. Thank you so much for watching today's video. Subscribe now if you're not already.